Can decentralized finance platforms survive long term, or will new regulations and laws hurt their growth? Okay, so going on to more of the question. The rise of platforms such as BlockFi and Celsius, to name a few, are proving to be lucrative game changers in a space where traditional bank loans are still prevalent. I feel that big banks and governments will not let it grow to a point where their bottom line will be threatened. Therefore, can DeFi platforms survive long term, or will new and possibly inevitable regulations, laws hurt their growth? Okay, very interesting. Okay, so before I give my response, let me just read the answer here from Chetty. He says, technically, those two you mentioned, including Nexo, are considered centralized finance given they hold the funds in custody. See Delphi Digital reports about this, but I like them regardless as they strike the right balance between being a crypto platform and ease of onboarding for newbies. To answer your question, I think the recent vulnerabilities highlighted by Maker show that there's a long way for DeFi to go mainstream. Okay, I mean, so now to kind of share my thoughts on this, I mean, I love Celsius. I mean, I would say next bull run, once they have lots of money and I want a way to lend it out, I would choose Celsius over Nexo and the others, right? Because they're insured. I personally know the founder. I mean, so if I have an issue, I can just send him a text and be like, yo, where's my money? So anyway, jokes aside though, I mean, Celsius to me is the more legit platform from doing my research. That's why I have an account with them. Now, I don't really have much money on there. So, because I just haven't had a need at the moment because I'm heavily investing in myself and Token Metrics. But if I was actively trading or if I was stashing money away in the long term, that would be my platform of choice for lending or earning interest. Now, I would also spread the risk around by also using decentralized platforms on DeFi. So I think a balanced approach is best. You can't just be all in on DeFi or all in on centralized finance. You have to spread the risk around both, right? That's what a smart investor does, or trader. You have to allocate risk across the board. So if Celsius goes bankrupt or whatever, or if their insurer, Lloyd's of London, I believe, or BitGo, if BitGo says, you know what, we won't insure the money, you're always going to have a plan B. So I would put some money in Celsius. I would use DeFi platforms, Compound, other DYDX and others out there. So I would use all of those. I'd probably spread the risk around 4 different platforms. So going back to your question, now your question was, can they survive long term? I think I would say centralized finance can definitely survive long term. I don't think the big banks who view them maybe as competition would just shut them down. I think what they would do is they would just buy them, right? If anything, I mean, I think Celsius has been crushing it. They have over $1 billion under assets, right, on their platform. So I could see some big company buying them out. So whether it's, I don't know, whether it's bank, because their target is mainly retail. So I would think a retail bank, if they want to get into crypto, I mean, if I had to speculate, I'm just kind of guessing, pulling stuff. I mean, the Bank of America types, the Chase Bank, right? Chase Banking. I wouldn't really see like a institutional bank buying them unless they're trying to go retail in crypto. But I mean, we're still far out. This is more like probably 5 years down the road. But I mean, Celsius is a very good business, I think. I'm not sure what their valuation is now, based on equity in the company, but I think it must be pretty high if they have $1 billion in assets under management. So I think the big players would buy them as opposed to just trying to lobby for regulation against them, because that will take longer. It's faster to just buy them, right? Kind of like how Binance has bought CoinMarketCap. They would just buy them. Or maybe even, actually, I would probably see one of the big crypto companies buying them. whether Coinbase or Binance. I mean, we do know CZ of Binance mentioned that they have one other company they bought to announce. I mean, I don't think Celsius would sell so early because they have so much potential, and I don't think they have any issues with money, right? But anyway, I mean, I think that's what would happen. Now, the main concern I do see is with DeFi. DeFi has no KYC, no AML. We've seen what's happened with IDEX, with EtherDelta. IDEX now has KYC. So I don't really think the DeFi platforms can grow and get big with no KYC. Because just think about this. If you tell this to, because we saw what happened with Facebook Libra. When Facebook Libra said they're about to launch, and because they're Facebook, they had the whole world watching, every single country's regulator went in on them, kind of like sharks going in on blood in the water on an animal or a human, right? So that same thing will happen with DeFi once it blows up. It's not blown up yet. Right now, it's just kind of like a mini blur. It's not really registered on the map, right? But when it blows up, let's say we go past $1 billion in DeFi. Let's say we go to $100 billion in DeFi. I mean, they're going to come in for DeFi. Because just think about this. If you tell regulators that a terrorist can go get a flash loan without any assets or KYC or AML, trade on 50x leverage, and make money to then fund terrorism? I mean, with no KYC, AML, or whitelist, they're going to put everybody in jail. Okay? So I don't really think that's kosher. I don't think that's going to fly. That's my issue with DeFi. I'm still pro DeFi, but if you tell that to people in Congress or to politicians that the next that ISIS can get a flash loan with no collateral, do a 50x trade on BTC, use those gains to find terrorist attacks with no log of what happened. I mean, so I think lots of people are in a dream to imagine that that's gonna fly. I mean, I know people like to say that DeFi is decentralized, it can be stopped. Yes, that's true, but I mean, EtherDelta was stopped, IDEX was stopped. I mean, all these are supposed to be decentralized. But I think those are just semantics, right? IDEX still has a company that does the day-to-day development of IDEX, right? So that's why when New York and other people said regulate, they put them in check. And same thing with EtherDelta. EtherDelta was decentralized, but most people would access it by going to etherdelta.com. Now, obviously, there are other forks of it, but once you shut down the main, once you cut off the head of the snake, the other ones that pop up are just tiny snakes. So EtherDelta has been forked, but those forks are not as big as the original EtherDelta was. So I believe for DeFi to really get big, to have like big institutions using it, there'll have to be some form of KYC. Otherwise, like let's take these companies, right? Compound, DYDX, Uniswap. They're centralized entities or foundations that are developing most of the code, right? And yes, hypothetically, it cannot get shut down. But most people use websites to access these decentralized platforms. And those websites can be shut down. You can go to the DNS and the hosting provider and shut them down. And people don't really enjoy hopping from different website to different website. I mean, unless you're creating something that's not even on a website that's decentralized or peer-to-peer, kind of like BitTorrent, right? BitTorrent, the FBI and different institutions shut down torrent tracker sites because those are centralized. But you can download a torrent software like uTorrent, I think Azure and some others, and those are on your desktop, and those are really decentralized. So I think that's really the challenge. So that's why with exchanges, I know in the past there have been exchanges like BitShares, even Resistance, which ended up being a scam. I'm sorry. But BitShares, for example, that's an exchange you download on your computer and that's really peer-to-peer decentralized. But because of that friction, it's not really taken off. It hasn't really blown up, because the more friction you add to adoption, the tougher it is to go mainstream and to scale. So it's kind of like a catch-22. So regulation will be required for them to go mainstream, but it won't really be decentralized. So I think full decentralization, in a way, is a pipe dream. But let me know what you guys think. Am I crazy? Do you think full decentralization is possible? Will centralized banks take over centralized platforms, or even DeFi? Will DeFi ever be big without KYC or AML policies? Let me know what you think.